Take a deep breath. Close your eyes for just a moment. Now imagine yourself sitting in front of your trading screen. The charts are moving, your heart is beating, your hand hovers over the mouse, and in that moment, that critical moment when you need to click, you freeze. Sound familiar? Or perhaps it's the opposite. The market moves against you, a sudden flash of red, and in a split second, an emotional decision surges, bypassing all reason, all strategy. That single impulsive click, that desperate attempt to get it back, that surge of revenge. In that instant, years of hard-won profits can vaporize. It's a scenario that has haunted every trader, from the wide-eyed beginner to the seasoned veteran. A split-second emotional decision that destroyed 3 years of profits. But what he learned next made him unstoppable. Right now, 95% of traders are losing money. Not because they lack intelligence or analytical skills, but because they're fighting a war inside their own minds. This isn't about the charts, the indicators, or the latest hot stock tip. This is about the unseen enemy within, the psychological avalanche triggered by a single emotional misstep. The market doesn't test your system, it tests your soul. And today, we're going to pull back the curtain on one trader's devastating collapse and reveal the exact protocol top traders use to stop the bleeding, to turn potential ruin into unwavering discipline. Let me tell you about Marcus. Marcus wasn't a novice, he was a machine. For 3 straight years, he'd been on an absolute tear. Day in, day out, he followed his system with almost robotic precision. He'd weathered market crashes, navigated choppy waters, and steadily compounded his account. By early December, he was up a staggering $250,000 for the year. He'd even started looking at a new house, a dream home for his wife and 2 young kids. Life was good. He was a winner. He'd cracked it. Then came that Tuesday, the day of the TSLA earnings report. Marcus didn't typically trade earnings, too much volatility, too unpredictable, but TSLA was his bread and butter, a stock he knew inside and out. He'd made a small bet on it earlier in the year that paid off handsomely. The whispers online, the analyst upgrades, they all pointed to a massive beat. He felt that familiar itch, that intoxicating pull of easy money. He saw the headlines, saw the pre-market jump, and a tiny voice, fueled by complacency and a touch of greed, whispered, "Just one trade, Marcus. You can't miss this." He took a position, larger than his usual size, just before the report hit. The numbers flashed on the screen. It was a miss, a significant miss. The stock plummeted, erasing his profits on that single trade in seconds. His stop loss, meticulously placed according to his rules, was hit. He took a painful but manageable loss. This is where the story usually ends for the disciplined trader, acknowledging the loss, analyzing the mistake, and moving on. But for Marcus, something snapped. That familiar feeling of control, that unwavering confidence he'd cultivated for years, shattered. It wasn't just the money, it was the ego. He was right, the market owed him. The sudden jolt of pain triggered something primal. He watched TSLA bounce slightly, a dead cat bounce. Aha, he thought, false breakdown, they're going to pump it now. He went all in, doubling his previous position size. He violated his rule about not trading against the trend. He violated his rule about position sizing. He violated his rule about not revenge trading. The stock, of course, continued its plunge. Another stop-loss hit, another layer of his account vaporized. The rational part of his brain screamed, "Stop!" But the emotional part, the part that felt the injustice, the humiliation, the overwhelming need to get even, roared louder. He went short, then long, then short again, chasing every tick, every flicker of hope on the chart. He was no longer trading the market. He was fighting himself. He was fighting the reflection of his own fear of being wrong, his need for validation, his impatience, his greed, his shame. In less than 30 minutes, Marcus systematically violated every rule he'd spent years perfecting. His system, his mental framework, his discipline, all gone, swept away by the tilt cascade. He watched his $250,000 year turn into a negative $50,000 loss. His account, once a testament to his mastery, was blown. The screen, once a source of pride, now reflected only destruction. He didn't sleep that night. He sat there, numb, the cold light of his monitors reflecting the horror in his eyes, just like the trader who lost $2 million and saw his destruction in real time. He had vaporized not just money, but a part of himself. The next morning, the conversation with his wife was brutal. "Marcus," she said, her voice strained, "we can't live like this. The constant stress, the ups and downs. I thought you had this under control." The threat of divorce hung heavy in the air, a consequence far more devastating than any financial loss. Marcus had hit rock bottom. He was exactly who needed to hear the truth, that he knew how to trade, but he couldn't figure out why he kept sabotaging himself. He had to face his demons. He realized that the market wasn't the enemy, his own mind was. What Marcus experienced was the tilt cascade, a psychological phenomenon that decimates traders. It's when one emotional decision, often triggered by a loss, an unexpected market move, or even a winning streak that breeds overconfidence, creates a domino effect of irrational choices. It's not just a bad trade, it's a breakdown of mental and emotional resilience. The best traders in the world don't trade to win. They understand that pain is the only price for clarity, and loss is the only path to real control. The market doesn't need to be controlled. It needs to be understood, or better yet, mirrored. So, how do you identify the tilt cascade before it consumes your account? Here are the 5 warning signs that you're about to enter the danger zone. Revenge trading. This is the most obvious. You just took a loss, and now you're desperate to get it back. You increase position size, ignore your rules, or jump into trades outside your plan purely out of spite against the market. Marcus fell victim to this. He tried to make it back, increased his position size, and lost $300,000. Increased position size without justification. You're not following your risk management rules. You're trying to accelerate gains or recover losses by taking on disproportionate risk. This is a clear red flag. Rapid fire trading or over trading. You're clicking endlessly, entering and exiting trades with no clear rationale, hoping something sticks. This often happens when you feel a loss of control and try to regain it through sheer activity. Ignoring your trading plan, your meticulously crafted rules, your entry and exit criteria, your risk parameters, they all go out the window. You're trading on instinct, emotion, or a desperate hope. Shifting blame. Instead of taking responsibility for your actions, you blame the market, your broker, a news event, or even another trader. This externalization prevents you from learning and reinforces negative patterns. Recognizing these signs is the first step. The next is implementing the exact protocol top traders use to stop the bleeding, to turn potential ruin into unwavering discipline. The stop-loss protocol for the mind. The 5-step emotional reset. When you feel any of these warning signs, immediately implement this protocol. Acknowledge and pause, the 5-minute rule. As soon as you feel that surge of emotion, anger, frustration, fear, greed, acknowledge it. Don't suppress it. Tell yourself, I'm feeling triggered. Then immediately stop trading for 5 minutes. Get up, walk away from the screen, go get a glass of water, look out the window. Just break the pattern. This isn't about avoiding the feeling. It's about creating space between the emotion and your response. Journal your emotion. Once you've paused, grab your trading journal. Don't just write about the trade. Write about what you're feeling. I feel angry because I just took a stupid loss on TSLA. I feel like the market is against me. I want to hit back. Simply putting words to the emotion can diffuse its power. This helps you sit with it, study it, and learn how to move anyway. Review your core rules, the immutable laws. Open your trading plan. Read aloud your top 3 to 5 immutable rules. These are the non-negotiables: your maximum loss per trade, your position sizing rules, your market conditions for trading. Remind yourself that these rules exist to protect you from yourself. Richard Dennis didn't just teach his turtles to trade, he taught them to trust the math, trust the process, and trust themselves to follow simple rules. Recalibrate your risk. If you're still feeling triggered, reduce your position size dramatically for your next trade, or even stop trading for the rest of the day. This isn't about giving up, it's about protecting your capital and your mental state. If you can't trust yourself with full size, you don't deserve full size. You have to earn the right to trade large by consistently proving you can manage your emotions, not just your charts. Focus on process, not P&L. The biggest mistake traders make is judging themselves solely on profit and loss, or P&L. But Marcus, after his devastating experience, learned that the truth about consistent winners has almost nothing to do with market knowledge and everything to do with how they think. The market is a mirror. It reflects everything inside you. The market doesn't need to be controlled. Your job is to follow your process.